So the Nifty is holding up quite nice and steady. You've got a century on the board today, 110 points higher. And mid-caps, as we told you before going into the break, are definitely better off today. There are lots of names flying around. Count in a Reliance Nippon Asset Management as well. 16-17%. The one ADAG group stock that has really moved higher today. Quite a big move on that one. Okay, we'll get to those stocks in a minute, but let's get you some more trading ideas first. Sandeep Wagle is with us. Good afternoon, Sandeep. What are you going with today?
Afternoon, Surabhi. I would go with a sell in a Muthoot Finance. I see a breakdown in the offering, stop loss of 487, target 462. And a buy in a Bajaj Finance, stop loss of 2670, target of 2754.
All right, Sandeep, thanks a lot for those trading ideas. By the way, this market's very volatile. Just look at again the two earnings reaction. Lupin's now selling off after that initial uptick. That's the stock which is now at the low point of the day. So just pull out that stock intraday. That bump up has been used to sell into in that stock. That's quite interesting. And Adani Ports really is all over the place. So let's see how things move on that one. But getting quite interesting on a couple of these names. Mr. Tulsian, your thoughts on Muthoot Finance? It's a stock which till about 3 or 4 days back was at lifetime high. We have the numbers now. Stock's corrected a bit. How do you approach it now?
Shanuj, if you see the background in which the NBFC numbers were all seen to be coming in, I don't think that you have any kind of disappointment from Muthoot Finance. But yes, you are right, because Q2 numbers were seen to be quite good. People were expecting that probably they'll be able to set the same kind of growth, which did not come. So maybe the profit booking is seen coming in. But if I take a fundamental view and the analysis only of the Q3 numbers, then I don't find any kind of disappointment.
Looking at the Lupin commentary, Anuj, Mr. Gupta is saying after a tough H1, we're now starting to see growth in the US. The growth momentum in the US will continue into the next quarter as we're on track with important launches. I don't know, the street is obviously taking a very different view, but since this company, as you rightly said, guided us to be prepared for 2 tough years, and now if they're saying that their biggest market is turning around, I mean, I'd want to give them some credit for that, but I don't think the street is enthused at all, despite the top line.
Yeah, I think we are in that kind of market. Also, you would wait for first quarter where they deliver. Promise is okay. That's fine. But you want to see if I think the Lupin's re-rating will come if you see 1 quarter where they deliver on numbers. I think that is, and I think that's the point even Prakash was making.
Absolutely.
That
Absolutely.
Because the inconsistency is something that the market doesn't like.
Yeah.
You deliver on 1 quarter at least, and then perhaps the market would look at it.
Okay, fair enough. Let's move on and talk about some more numbers. Mr. Tulsian, sir, 2 numbers from beyond the Nifty 50 list today. One, an absolute hit, SRF. I think there was a call. I mean, is there something that really stood out for you post the numbers, post this call, that's inspired so much confidence? And on the other side, Tata Chemicals. Absolute slam dunk on that counter today, post earnings.
See, in fact, SRF has been giving the consistent performance for this Q1, Q2 and Q3 again, and we were quite impressed. And in fact, if I'm not wrong, in fact, yesterday or day before, yesterday, because the day before was the results, we said that, the numbers are seen to be quite good, and we have been consistently keeping a positive view, having recommended many times to our clients. But yes, Tata Chemical is seen to be a big disappointment, because I don't think that this kind of numbers were really expected. And that is seen to be a big disappointment.
Okay, by the way, if you see the Lupin, the sales include NC licensing income of 210 crores on licensing of MALT1 inhibitors to ABVIE Inc. That's something that they're saying. It includes 210 crores of license fees. If you exclude that, I think the numbers will be much below street estimates.
Not and I think really, Anuj. I was looking at that, because 4,500 is what they've done, including this income, right?
No, so that's what I'm saying. So if you exclude that from the bottom line, the numbers would look much below the street estimates, and that's why the stock's selling off a bit from the high point. I was just trying to look at why that could be the case.
The other point is the US market, as the kind of noises that are coming from the administration there, is only going to get tougher. So while they might start seeing improvement, it's relative to what they've performed last year. It doesn't really mean they're going back to those glory. Lupin had margins of 29-30%. If you see the margin trend, it's way off from where it used to be at one point, in its glory days. So you'll have to give it time. As I said, the inconsistency doesn't fetch that premium for this name. So you'll have to live with a little bit of performance in a couple of quarters and then see some traction.
Mr. Wilson, how you placed on a stock like Lupin?
See, Anuj, the item which you have said just now, if you knock off, because if I just analyze the numbers, 450 crore PBT for this quarter, and even if I take that as a consistent, this one, the Lupin need to report a bottom line of close to 1,000 crore for FY20 if I go by the guidance. And if you knock this off 200 crore as a licensing fee, which I presume that the major portion of that gets added to the EBITDA or maybe to the PBT, then practically even Q3 numbers have seen to be quite flat, or in fact quite disappointment. Maybe Q2 numbers were seen to be pleasing one. When so I don't think that overall you can draw the comfort, and I agree with Prakash. If you have the Trump, the noise going on with the drug prices to be seen coming down in US, which is bent upon, then that will be seen definitely negative. And if you take a call, as I said, that if you presume that FY20 may have a consistent or maybe this visible bottom line of 1,000 crore, you are looking for an EPS of closer to 25. That means you are discounting the stock maybe at a P multiple of 30-32, which is again seen to be quite expensive amongst the pharma stocks of the similar comparable peers. So I don't think that one can really have solace from these Q3 numbers, even if I exclude this exceptional legal cost of about 350 crore having incurred. So definitely one has to remain cautious, and the management commentary which they've said that FY19 is going to remain tough. Probably Q4 also will not be giving any kind of comfort. So no point in taking a call now, and in fact US FDA issues needs to get resolved overall. So I think that one should remain away after having seen that 200 crore plus having licensing fee having received, which is included in the Q3 numbers today.
Oh yes, so suffice to say that this is actually a weak number that you have from Lupin if you look at all the internals. But the stock is very volatile, as you would expect on a day like today. It's all over the place. Just look at the stock; it's really moving from one way to other, and that too quite volatile. Cipla's numbers, by the way, flashing on the screen. Again, a bit of a miss on the estimates on Cipla stock, but then Cipla is no longer at all-time high that it used to be going into the earnings, but still the stock's cooling off a bit from the high point.
I was just looking at the EBITDA internals. There's a bit of a reduction in depreciation this time around. Some of the other costs are also slightly higher. So at the EBITDA front, there's a bit of a miss. 17.7, I think, is what they've done on the margin, and that is slightly lower than estimated. Q2 margins were at 17.5, and they've, I think, done 17.7. We'll just get that number back up for you on the screen. So operationally, that seems to be a bit of a miss as well. Mr. Tulsian, first thoughts on Cipla? How would you look at this?
See, I think one has to understand the tax write back, as on a comparable period last year. And if I take the tax liability, which is seen a bit high, then optically the numbers are not seen to be so disappointing. But one has to really analyze. I have not really gone through the numbers.
Okay, fair enough. So lots of these pharma names making the news today, and stocks largely volatile. Cipla is, of course, reacting slightly better now compared to what Lupin has done. On Lupin, there seem to be, of course, a couple of those issues coming through. On that note, Mr. Tulsian, we'll thank you for being with us this afternoon. Thanks very much for taking the time out and discussing all of those stocks today. Let's now bring in our Alpha Manager of the day as well. We have Siddharth Bothra, Senior Vice President and Fund Manager at Motilal Oswal Asset Management, joining in. Siddharth, good afternoon. Thanks for being with us. So, the one discussion that we've all been having in the newsroom is, when will the mid-cap market break out of what seems to be a bear market of its own? How do you look at the index at 11,000 and what is happening beneath the surface, below the top 20 stocks?
Yes, so if you look at the mid-cap index, over the years, say from CY14 to 17 onwards, it had majorly outperformed. I think on a CAGR basis, it outperformed almost like 15%. And, the valuations were almost like a 30-40% premium to large cap. So in the last 1 year, or more pronounced in the last 6 months, what we have been seeing a correction on that. So now the way the valuations have fallen off, so typically, it goes on both ways, extreme on the higher and the lower side as well. So, you can't rule out some more corrections in some of them, but I think on a fundamental basis, many stocks currently look very attractive. And I would think this is a time to start looking at mid-cap stocks, and going forward, I would have a incrementally positive view on them, because many of these stocks have reached very attractive valuations and are looking much more attractive today.
Okay, Siddharth, just stay on. We'll just get across to the management of Lupin addressing those numbers.
PBT was 436 crores, pretty much flat sequentially and up 14% year on year. The PAT was 190.5 crores. Again, after the exceptional item, it was a loss of 151.7 crores. Forex was a huge swing in the quarter. Sequentially, it was a swing of 370 crores. We had a gain of 212 crores last quarter, a loss of 157 crores. So, I think all of this goes in to show that the operational performance was strong. We had a huge Forex negative. We had the one-time negative on the quadruple matter as well. But adjusted for that, EBITDA actually increased by 3% versus sequential quarter. In the 9-month sales are up as well. We actually had, we started the year with a very bad quarter. And I think we've clearly seen that pace pick up. Some of it, a good part of that is connected to the US, what Vinita spoke about. But 9-month sales are up 4%. So strong operational performance, I think only setting up for an even better quarter to come. We will take questions. Yes.
Right. So to start off with, firstly, in terms of the Forex loss as well, are we saying it's 157 crores during the quarter?
It is.
Yes. Okay. And secondly, in terms of where the exceptional item is concerned, where we've made a provision of 342 crores, is there a possibility of a reversal happening on that front? And if yes, any timelines that you're looking at?
No, so we're going to appeal it, but we're not going to count on reversal, and we're going to appeal it and as hard as we can.
Right.
And we don't have a time frame in mind.
So
okay.
And from ET now, I'll just take questions. The revenue has a one-off out-license fee, so is this a one-time impact? Well, I think it's a 210 crore item that you have taken into account. So is this a continuous process? How does that work?
So this was, we were very proud of it. This was the NCE licensing that we did to AbbVie, 30 million upfront, unprecedented numbers for a preclinical candidate. I wish it was an absolutely recurring thing to happen every quarter, but these are one-offs in that. So when I talked about that EBITDA number, I adjusted for these one-offs when I talked about it. Clearly, that's a molecule that we are very excited by, but it has to go through the regulatory and clinical process, and as it does, there are a lot of milestones associated with that. So we would love for it to come to market, but there's quite a few stepping stones to that process.
I think it's also important to note that if you take that out, you still have growth of 7% quarter on quarter as well as year on year.
Can you give us an indication of how you see pricing and competition in the US markets going ahead?
Yeah, so actually we see a very encouraging trend right now. I mean, after a couple of years of intense pricing pressure, over the last couple of quarters, we have seen the pressure really leveling off, the pricing erosion leveling off. Our peers, the generic manufacturers, are far more rational now than we were in the last couple of years. So we believe that we are back to years of single-digit price erosion at this point. When we went through pressures over the last couple of years, it was double-digit price erosion, so it was a really challenging situation for us and the generic industry. We think that is behind us, and companies are more rational about pricing and the margins they need to make to be able to manufacture products on a viable basis.
Can you talk to us about the Goa as well as the Indore facilities, both under the warning letter?
Sure. Yeah.
Even Mandideep has 22 observations, so what is the status there?
So I think we've had mixed signals as far as outcomes out of regulatory inspections. I think we've had our fair share of inspection without any 483s or with one 483 as well. We had Indore. We're clearly not happy with that. Unit 2 had 4 observations there. Unit 1 had 18. We've addressed those. We've responded to FDA already on that. We've sent a follow-on update as well. There are some very comprehensive actions that we're taking on that count. And it'll be a few months for us to complete those. So we will send updates to FDA in that time as well. Indore is too fresh to talk about. I think other than 6 observations, we've not shared anything. We're still in the process of responding. Indore and Goa, as you know, were under a warning letter, and these are FDA inspections going on now in line with basically for cause inspections to assess where we are with addressing the items coming out of the warning letter and overall GMP.
Right, so is there a possibility wherein we receive the EIRs in FY19 itself, because that is what everyone was expecting at the beginning of the financial year? So is that a possibility? And number two, are there any further remediation costs that you're taking into consideration for the remainder of the year?
So I think FY19 is unlikely at this point of time, right? Because we're already in February, and I think we have 3 weeks to respond to the 483s itself. We haven't even completed Goa, so I don't think that would be likely. But I think hopefully a quarter out, and I think while we're not happy with 6 observations, I think we should have done much better. But I think we can address these well to the agency's satisfaction, and depending on the Goa outcome, I think we should have a good outcome. Sometime in the, hopefully in the first or second quarter of the next fiscal.
Right. In terms of margins as well, last 2 quarters we've seen something always hovering between 13 and 14%, where we've moved beyond that yet again. Do you think this number is going to be maintainable in the coming quarters?
So I think the EBITDA percent of 18 is pretty much the base that it should be, right? So 18-20 is what we talked about. I think we have it at that level. We obviously would see improvement in the coming quarter, for example, as we do some very meaningful launches. But I think the intention is to improve that back to the 24-25% over a period of time. I think that'll be several years, because we continue investments on R&D, we continue investments into our facilities as well. All of those come at a cost. But I think in the next 3-4 years, we do see it going back to the 24-25%.
Right. And in terms of the Japanese market as well, everyone had big eyes on Lupin for Japan, but the kind of scenario that we're seeing in Japan, the anticipation was of another price cut that could be on the anvil. What is the situation over there, and do you think you could still be betting big on Japan in spite of the kind of price erosion that we're seeing?
So we have obviously faced the challenges in Japan. I mean, the government started annual price cuts, and the whole industry is struggling with that, and as are we. We have put a lot of optimization efforts underway. Already we had significant benefit coming out of our supply chain from India into Japan that we had leveraged to be able to improve our margins. On top of that, we have put some strong operational efficiency measures within Japan. We have looked at right sizing.
Okay, that's Lupin's management. The stock is very volatile. It's reacting both ways right now. The last few minutes, just look at that chart. Really all over the place. Anyway, we were in conversation with Siddharth Bothra. Siddharth, your thoughts on pharma? I mean, you have had some of the names in the past, but is there anything that you are bullish on right now?
I think, if you look at the pharma sector right now, they are in what you would call a deep value stocks. I think the worst for most of these stocks seem to be behind. The pricing pressure that they've been seeing in US, that's also abating. And, even on the product launch purses and, the approvals that they are expecting. So once those start coming in, I would believe, most of these pharma stocks right now at a phase where, one should look at accumulating them, and most of the key risks seem to be behind, and going forward things should gradually keep improving for them, because many of them have been continuously investing, and they've been investing in a big way on the R&D, and their business model has been changing in a big way. So, they are deep value stocks. Things are not going to change around very quickly for them, but for a long-term investors, they look attractive.
Okay, just to quickly add from the Lupin release fine print, the North America business quarter on quarter is up about 11.5%. So at least there's some stability, some semblance of stability on the North America revenue that's begun to flow in. That could explain maybe why there are some buyers, there are some sellers. Depends on whether you want to read the glass half full or half empty with respect to Lupin. But Siddharth, I want to move to a different sector, and that is auto. Now, in the funds that you manage, you have some interesting names like Eicher and Maruti as well, and that's the big debate. Right. Have we seen the worst? Is the price damage on auto stocks over?
So it's difficult to take a call on whether the stocks have bottomed out or not. But if you look at what's been impacting these stocks, I think most of these issues have been very transient, whether you look at the cost pump up they saw because of regulatory issues, or like in terms of insurance or the raw material pressure, or the kind of discounts they had to give in the last quarter and so on. I believe demand is already, when you do a ground level check, seems to be coming back. But this could be gradual, and it could take some more time. But if you were to look at investment opportunities on the discretionary side, I would believe both these names, on the two-wheeler side, whether it be Eicher or Maruti, both of them, now have reached on a valuation perspective levels where they are again looking very attractive. So instead of trying to, get the bottom for these stocks, or trying to, kind of really time them, one should look at them, as a 2-3 year investment opportunity at least, and then on that basis, they would look attractive right now.
Okay, what about the consumption story? We've seen this quarter a lot of companies going for top line growth, but sacrificing margin a bit. In terms of valuation, do you think that will have an impact, or do you think this is still a good space to buy?
If you look at the results for most of the consumer companies, whether it be HUL or, Pidilite or many of them, they've all shown very strong volume growth. I mean, for some it's been almost like double digits, or even for, some of the other names, it's been in the high single digit numbers. So I think they've benefited significantly from the rural side. The 30-40% that, many of these companies get from rural side has been seeing strong growth. And, while you're right on the margin side, some of them have seen pressure because of raw material and other issues. I believe, on a growth side, they should continue to look attractive. Valuations for many of them continue to remain, at very elevated levels. It's difficult to, take a, view on how, on a long-term basis, one could make, reasonable money at these valuations. But within this entire consumer pack, you have some companies where, valuations are not that expensive, and growth also looks very strong. So, we are trying to, identify some of those stocks and stay long-term investors within that. But as you mentioned, valuations is an issue across consumer segment.
By the way,
and it continues to remain so.
Okay, all right. By the way, the market is picking up more and more momentum. Look at the Nifty go now. Let's pull up Bajaj Finance, by the way. I mean, look at the leader BAT, 4% up on that stock, lots of momentum. You've got, of course, some other stocks getting added on to the party as well. OMCs are finding takers today, so IOC, HPCL, these are stocks on the upswing. And the mid-cap index, Anuj, now virtually turning positive, so quite an afternoon.
I think on the index, there's absolutely no doubt that what has happened today is that finally that range has broken. And while a lot of people thought that that range will not break, and if at all it breaks, it will break on the downside. It's the upside breakout. And, you could complain about the narrow nature of the market. I still would. Even now the advanced decline is well in favor of the declines. You'd still complain about the nature of the move. But the fact is that this is a bit of a breakout which is on in the market. I think the market's once again making a bit of a distinction, Surabhi. The fact that you mentioned Bajaj Finance, I think that's one stock which is really looking primed for its, testing its previous all-time highs. Tech Mahindra, of course, adding some more weight. Eicher Motors over the last 2 or 3 days, seems to be bouncing back a bit. In fact, the entire auto sector seems to be bouncing back a bit. So that's also helping. I think ICICI Bank also helping a bit right now. So on the index, I think this is clearly a bit of a breakout.
Absolutely. So, Siddharth, on that note, let us ask you what you're doing with financials. You've got some interesting names. For instance, some of the insurers are among your biggest holdings in your funds. Across the financial universe, I mean, how are you picking NBFCs, or are you only sticking to insurance? I'm not talking banks. I'm talking non-banks for the moment.
Okay, so on the NBFC side, we've kind of avoided other than HDFC and Bajaj Finance and Bajaj Finserv, we've generally avoided the NBFC space, more so, the HFCs or, some of those segments. But so we've not incrementally, added anything on that side, and we've continued to ignore most of those NBFCs. Within financials, banks, we think corporate banks today look really attractive. So, corporate banks is where we have incrementally increased our position.
All right, Siddharth, we'll leave it there today. Thanks a lot for joining us.
Thank you so much.
By the way, look at Lupin now. really been all over the place, and now in fact at the highest point, well in the green now. So something that the management said, which the market latched on to, I mean, this is really incredible. You just see the last 10 minutes of the stock, and I mean, how do you approach a stock like this, Surabhi? That's why perhaps on result day you should not. Just let the noise settle down and then take a call, because this kind of move can get you both ways. I think it would have done that to a lot of people today. I think people would have been caught on the wrong side both ways, the way the stock has moved. Just really bizarre, that move.